Hey everybody, welcome to Mortgage Today for Tuesday, November 14th, 2023, and oh, what a day it was. It was a great thing to wake up to today. UMBS were up 64 basis points after the first hour of trading. S&P futures were up 51.5 points as well. This is an extreme testament to the gravity of this particular CPI report that all it took was a 0.1 deviation from forecast for bonds to see such a huge reaction. Month-over-month core CPI came in at 0.2 versus a 0.3 forecast. It was 0.3 previously. Month-over-month headline CPI came in at flat versus a 0.1 forecast. It was 0.4 previously. Year-over-year headline CPI came in at 3.3 on a 3.7 previous. Falling gas prices contributed to the decline. However, transportation and rent continued to be major drivers of inflation, with increases of 9.2 and 6.7% respectively. The NFIB Small Business Optimism Index decreased slightly to 90.7 versus 90.8 last month. Not a big change, but 43% of business owners reported job openings they could not fill, with transportation, construction, and services sectors hit the hardest. 22% of owners reported that inflation was their single most important problem in operating their business, with most skeptical about better business conditions in the short run. In the commentary, the NFIB discusses how we could have such low sentiment when GDP grew at 4.9% in the third quarter. The first explanation is that the growth rate will be revised downward. That is a possibility. However, if you look at the components of the GDP growth, a lot came from inventory build. Inventory buildup is generally what causes recessions in the first place, as companies cut production in order to move the merchandise, which triggers layoffs. Given the data about sales and inventory build, the fourth quarter is looking to be weak. The economy has also been supported by government spending, which is also called junk GDP, since it's artificially large and doesn't represent real sustainable demand. Fed fund futures have taken any further rate hikes off of the table. They are forecasting no change at the December and January meetings, typo there, and a 27% chance of a cut in March. Seems too soon to me. There's something about CPI releases in November. Last year's example prompted one of the biggest single-day data-driven bond market rallies on record. This year's isn't far off, a fact made all the more stunning by the mere 0.1% beat. There are a few ways to try to explain the size of the reaction. On a nitty-gritty note, the problematic housing component fell from 0.6 to 0.3. On a more general note, it's possible the bond market was more interested in no whammies than a sweeping reversal of inflationary pressures. At the end of the day, the UMBS 6.5 ended the day up 70 basis points. The 6% coupon gained 89 basis points, and the 5.5 coupon actually picked up over a point. So ending the day at 101.11, that puts us up here in this new range, which has the 100-day moving average at the floor at 100.946 and a ceiling at the Fibonacci of 101.633, with the 200-day moving average converging down upon it. So we have some good technical support. So hopefully they stay up in these ranges for a bit. We also got a post from our sponsor at thatmakesense.com. This is a series from the Slight Edge 5, which is a tremendous book for a real game plan to make all of your goals, dreams, and plans come true in 2024. So check it out now. Check out the video at our sponsor, thatmakesense.com.